July 30th, 2020, Thursday. So let's take a look at the market. The market basically, this morning it opened up and went lower, tried to break through this line. You see this is a long-term, I've been talking about this kind of trend line that the market is just going above, below, above and below, and try to break a little bit through the line, and it immediately got rejected, and now the market has bounced back. You see that? So this line is very valid. I'm telling you, this line is very valid, and it's gonna hold until it doesn't. But right now, you don't want to bet against this line, right? When the price goes under it, you better buy. When the price dip below it, you better buy. You better looking for long opportunities. And if you're shorting, you probably don't want to be there, because look at this. Look at this kind of price action. In just 2 hours, you're going to be holding a lot of losses, right? You could be shorting from here, and in the entire, if you held on, even if you short at a perfect spot on July 29th, today, if you hold through your shorts, you're going to be losing money by now, right? So you don't want to short this market for sure. Or if you're shorting, you have to be very careful, making sure you have your stops in place, just so because you don't want to turn a winner into a loser. Okay, so let's take a look at NASDAQ. NASDAQ is also going up. Same story, because today we have earnings. Facebook, Google, all these companies have spiked up, right? Because they all had pretty good earnings. Apple, right? Same story. All these guys. Oh no. Alphabet. Same story. What else? I think Amazon has gone up a little bit. Yeah. So all these stocks have spiked up. Today, that's why the market's up quite massively today. And the earnings turns out for all these technology companies turns out to be great, and they are the engine of the economy. Despite the U.S. economy is projected to be down by more than 9%, but these technologies' profit margin actually are rising, right? So the market, because these technology companies are the market, they are like 25% of the market, or even 50% of the market, if you depends on what index you're looking at. As long as they are financially doing well, then the market is going to hold up, right? It's going to hold up pretty well. And I think again, if you look at Tesla, all these stocks, I think they are going to hold up above their key resistance levels. And but the thing is, as an investor or trader, we're looking for entry point. We're looking for opportunities to get into something that's inexpensive. Right now, all these major names are fairly, they are, I would say, fully valued or even overvalued, right? Because we are at all-time high, and the general economy is not doing well, right? And okay, so, but I'm still looking for bargains in this market. So let's take a look. Some bargains like Slack today also bounced a little bit. I don't think that's the bottom yet. I think this might dip down even further, but if it does, I'm just gonna buy more. This company, I think, is really undervalued in this market. I don't know why this stock's not moving. Okay, Zoom Video Communications doing very well, outperforming, right? So this could consolidate and go even higher. Atlassian is also one of my other favorites. This is a long-term winner, and I actually bought some back in 2016, but I sold in 2017, unfortunately, and now it's 187. So this is also another remote work technology company. C, let's take a look at C. This is Southeast Asia Amazon. I bought, I also bought back in 2018, and wow, look at this, man. I sold it too early, sold around 27. Hey, I'm a bad investor, man. I should have hold on to all these winners. But I have some losers I had to cut. You never know. Anyway, so they all, I mean, these companies don't expect them to go down anytime soon. And the mainstream media is telling me, August earnings, stock market might crash because bad earnings. Look at today, right? Everything's up. Everything has shot up, and the earnings are fine for these major technology companies. Okay, so let's take a look at the cryptocurrency market. Look at Bitcoin today. Bitcoin is still just hovering around this area. I like to compare Bitcoin with Amazon because of similar, price structure. Let's go back to Amazon. So Amazon basically is zoomed through this level. If you look at this, right? This parallel. So Bitcoin is consolidating. That kind of worries me a little bit because I'm expecting Bitcoin to quickly zoom through this level. If this is consolidating, again, the structure is different. Amazon back then is a smaller company than Bitcoin. So right here is $25. Right now it's 3,000. So you divide that by 100. Amazon's market cap back then was $15 billion. So this was a $15 billion company back then. The market cap was 15 billion, and today the Bitcoin market cap is about 150 billion. So it's a 150 billion. So the size of these two companies or assets are very different, right? This is 15 billion, this is 150 billion. And so to move Bitcoin, I don't think the amount of money required to move this thing to a much higher position is enormous, and it's not going to be easy for the money to shoot this thing up to a very high level. Well, it was easy when the Bitcoin was cheap, right? It was when it was like $200, but now it's 10,000. And it's also very liquid. It's not easy to do so. So right now, I think we might consolidate a little bit. I don't know how is this gonna go now, but hold on to this. Ethereum is a different story. Let's take a look at Ethereum. Today I was hanging out with a friend of mine, and we both invest in Ethereum, and today I had a major FOMO, fear of missing out, when in the afternoon at 2 p.m. Eastern time, the price would start shooting up to the upside quite frantically, and I thought the thing's gonna go to the moon, but obviously it didn't. It's only up, to be honest. If you're looking at this from objective standpoint, this is only a 5% move. It's really small it's actually a normal volatility. So, and we are also, one thing we have to pay attention to is that we are close to a major long-term resistance here, right? So if you look at this, this is one major long-term resistance, and the price came here last time and had a lot of trouble getting back up to a higher level. And you can see that here, the most of the trading volume happened around this level, and this level is actually a very important level as well. We are actually, if you look at this, the price actually reacted to this level just a couple of days ago, right? We consolidated and we went to the upside, but you can see, actually it's dropping again. It's dropping. You can see that the price came to this level, which is very close to the level it had trouble before. Let me just put here where we are. I think the highest spot we went was maybe here. Yeah, so somewhere here, you can see that. Let me just zoom this out. So we got rejected right there, and you can see that the price right now is just slowly falling apart. And I don't know if this is gonna might be even collapse. I mean, this could be a FOMO rally that just attract people to buy, and eventually this is gonna collapse, and it might collapse down to another key level. So I'm gonna label down the key levels here, so we can pay attention to this. It might, if this thing collapses, I would see a very quick move. I'm expecting a very quick move down to the, 286 level. Oops. I'm expecting a pretty quick move if this thing is not able to hold, and it could just straight down to this 285, 286 level. I was pretty FOMO this afternoon. I gotta tell you. For some reason, I guess this price just triggered me, and psychologically, and human psychology is very easy to be triggered by the price. And whenever your psychology is being triggered by the price, usually it means you should do the opposite. But most people can't, right? They cannot separate themselves, logic from psychology. And when you have a strong feeling of FOMO, you are identified with the feeling, and you think that feeling is something you have to act on, and that's usually when people buy, and that's usually when people make the mistake in the market. And this afternoon, obviously, I'm aware of this psychological aspect of trading, so I can feel the FOMO. I feel so bad. I feel that I'm missing out because I was going to buy more at this level. And I felt like, oh man, I'm missing out. This is gonna go to the moon, and maybe it won't. Maybe this is a trap. Maybe this could be a trap that it could break apart pretty soon. And right now, it's actually making a new low from this point. It has trapped a lot of buyers here. If you look at this, right? If you look at this, everyone who bought here right now is losing money. So everyone who bought, this is slowly drifting down pattern, and it could break down ferociously to the downside. So we don't know. But if the price comes down to this level, definitely start buying more. Anything under 300 is pretty safe bet right now. And I thank my friend for. He was more calm. He's not really in the market every day. So when you're in the market every day, your emotion could be swayed by the market because you're paying attention to the market, right? You are identified with the market, and that is a double-edged sword to a trader, right? For a trader, obviously you want to be connected to the market, you want to feel the market, and you want to be in tune with the market, right? Just like you're doing surfing on the ocean, and you want to be in tune with the waves. But if you are too into the market could capture you. The market could capture your psychology, and every spike up, every spike down could cause your emotional response and really destroy your ability to think clearly. And this afternoon, my friend just told me, this is a 5% move. Come on, man. Why are you home filming? And I came home, I took a nap, I woke up, I look at the chart again. I'm like, yeah, why am I FOMOing, right? This is a 5% move. If I miss it, it's only 5%. It's not gonna kill me. I have like 30% move in some of my opportunities all the time. This is nothing, right? And I should wait it out. I should wait out to my proper price of entry, so I have a low risk of entry. Guys, it's okay if you miss a trade, but it's not okay if you enter your trade at the wrong point, because there's a high chance for the market to shake you out if you enter at the wrong point. For example, if you entered here at 241, right now it's 230, 232, 231, you already lost $10. So if you bought like 100, you already lost 1,000 right there, right? So you probably don't 1,000 in like an hour or 2 hours, and so you really want to hold on to your urge. You really need to have a really good emotional management, and most importantly, you have to rest well, right? When people like us, when a trader who doesn't get enough sleep or he's really tired, his prefrontal cortex, the thinking mind, is not going to be as effective, and his lizard brain, his reactive brain, his not cerebral, sorry, his what do you call that? The amygdala is going to take over, right? The fear and greed gets magnified when you're tired, right? When you are not paying attention, when you don't have the focus, and that's something we should definitely avoid. So whenever you feel like FOMO, you feel tired, do not trade. And that's why I've been recommending that the first thing you get up in the morning, you don't want to make a trade. You want to, clean yourself up. You want to brush your teeth, wash your face, take a cold shower, come out of the shower fresh, then start making a trade. Making a trade in the morning is absolutely usually all my bad trade happens in the morning. When I first woke up and when I was like still sleeping state, I sometimes I look at the market, I start, getting finger itchy. I pull a trade and boom, losing money, right? That's bad. So, yeah, that's all I want to talk about today, and see you next time.